you thinking about buying an annuity to help cover your long-term care expenses? Because if you are, we want to talk about a couple of the options that are on the market. Hey, Darrick, how's it going?
Hey, good, Drew. Yeah, the long-term care annuity, that's kind of found its niche with our clients for people who have health concerns. Maybe they're too many health conditions to medically qualify for like a typical insurance policy or long-term care policy, but they still have that concern, or people who kind of want to self-insure the long-term care risk. And so it's a good fit. There's one company in particular that we do a lot of business with where they allow you to index whatever money you move over. Say you move 100,000 over, you can index it to two name brand, big, huge financial institutions indexes. And if the market goes the other way, you get a 0% return for the year. But we've had clients who've gotten that 10, 20, even 30% return over a year.
Yeah, so that's one
So
one way to do it, and then the other option is to just buy a dedicated long-term care annuity. There's a few companies that offer them. One of the better ones is similar concept. You put $100,000 premium payment into this annuity, and let's just take a 10-year example. And this is a guaranteed number with this one, if you put in 100,000, you're going to have right around 300,000 in long-term care coverage. So you're able to kind of leverage your money if you need long-term care, and if you just want to cash it out, you can do that. After 10 years, it's got $106,000 cash value. So with this one, you don't have as much growth as what you're talking about, Darrick. So why would somebody choose one or the other?
I'd say for people, the one you're talking about, it's going to be for people who think that, hey, I probably have a really high chance of needing long-term care within the next 10 years.
Maybe they saw
Because
a
the
parent
advantage of
need
that
it
is
or
your
something.
benefits. That benefit is there guaranteed upfront, and it's paid tax-free. The one I was speaking of, you have to have some faith that the market's going to be higher, and so you need to give it some years to grow. But they do have an optional rider you can add. It's called enhanced liquidity. So after the 5th year, if you need long-term care, they'll give you a 25% bonus to the account. But you do have to pay taxes on this version capital gains taxes when you begin to take it out. So that is one difference between what you're talking about and this one.
Oh, that's a good point. Yeah, and also the option where you have that immediate 3 times leverage, it does require health underwriting. So if you have marginal health, this might be an option. If you have pretty bad health, the other might be an option. I think the main takeaway is it's a very individual decision for each individual client based on their health, the specific conditions they have, medications, health history. And so we've developed some comparisons of these options, sort of some proprietary software that lets us create for an individual a comparison across multiple companies, because you don't want to just look at one. There's not like a one size fits all best product.
Yeah, and that's kind of our secret sauce is objectivity. We literally work with every single company out there. And so we'll go over the pros and cons of each. So if you want to learn more about any of these products and just get an objective opinion, because they all pay us about the same. Yeah, we're paid commission. We're the first to admit that, but they all pay us about the same. So we don't care which one you go with. We just want you to use us, and we'll go over like I said, the positives and the negatives, because all these products have goods and bads, and we're happy to point them out.
Yeah, they are. And it's a very individual decision based on your personal experience. So, yep. All right. We'll wrap it up. We just wanted to kind of talk about some of the higher points on these long-term care annuities, which are a really fast growing segment of the market.
Yeah. If you want to learn more, click on the link below.
Yep.